Hey traders, Raghee here. Welcome to Charts and Coffee. All right, so we're watching a drama here that was unfolding last night. So I'll tell you, my husband was watching the Chiefs Bills game, and I was watching this game. Right. So unlike the Chiefs or Bills, which whomever wins doesn't mean anything to me, I know if I can manage this kind of volatility on a Sunday night, Monday morning, have a game plan, think about what kind of trades I need to be in, what kind of trades we avoided, which is a really important topic for today. We can manage our money. So yesterday there was a heck of a drama unfolding. I remember seeing a couple tweets earlier in the weekend about something called DeepSeek. Well, we all know what it is this morning. And obviously in typical market fashion, there is an absolute overreaction. But is it really? Well, here's the bottom line. It doesn't matter. What we do know is this is a reaction. We can see that futures got down to, take a look at this low here at 20,763. What a huge move. This is a significant move from where we were on Friday. Now, please note, point moves don't mean as much as they used to, because points are what? Well, we're going to have larger point swings when the value of the stock or the sector, or in this case, the futures contract is higher. I mean, many of you probably remember too what a big deal it was for the NASDAQ to reach 5,000, right? And here we are at 4+ times that amount. So price swings are going to be greater. So we want to think about percentage swings. And right now, the NASDAQ is down 3.5%, which is far off the lows. Why is this? You'll see some of the notes that I've got here on the left side of the screen. Obviously we know that there now is all sorts of questioning around whether or not the AI sort of hyper growth, if you will, was merited, because there is a belief. And by the way, before we take something at face value, please remember, this is all about the assumption that a lab out of China has figured out how to create really, I was playing with DeepSeek over the weekend. It is in some regards pretty darn impressive. The fact that it's open source, the fact that it can be run locally on a machine once set up, the fact that supposedly it's running off H800 Nvidia chips as opposed to the 1,000, etc. Again, a lot of assumptions here, but this is what's creating the melee. And the bottom line is this, and this is something I wanted to bring up first. I guess Nvidia is really kind of an AVGO, or kind of smack dab in the middle of this. So I think the first thing to talk about is, how can we talk about setups and volatility that we could not possibly foresee? So rather than getting into the game of, we saw this, that's nonsense, that's garbage, I can't see into the future. But let's talk about what we see on Nvidia, for example. There are, in this view, let's say we go back looking at 1 month or 2 months of data. Anyone here in this particular Charts and Coffee episode, if you've been here for a while, red candles are bearish, and these are not traditional Japanese candlesticks. These are top tier candles. Green candles are bullish, and yellow candles are neutral, based on not just price but participation. And before I start to get really bullish, I want to see 5 green candles in a row. Obviously, we know there was a quick shift from bearishness to neutral to bullishness. And then we had a sell-off on Friday, a sell-off that, by the way, was about 2x the range of the 2 candles that preceded it. We call this a candle of unusual size. Yes, absolutely homage to one of my favorite movies, The Princess Bride, and rodents of unusual size. I actually saw Princess Bride is playing in theaters. I guess it has a limited engagement. I might have to check that out while it's on the big screen. So this is a candle of unusual size situation. But if I'm looking at the structure of Nvidia, is there any reason to put this high on a buy watch list when, arguably Google looks a whole lot better? By the way, buy better, where's Google going to open up today when we're taking a look at this pre-market? It's at 193. Is it down? Yes, but look at the structure of Google. Look how much more resilient an uptrend is. And if you have the tools to be able to look at a move like Google, a structure like Google, and say, gosh, there's probably more resilience built into the participation, the attention, the price action in Google as opposed to, Nvidia. And that's watch list building. That's all upstream from today. So I don't want to be salt in a wound. But for those folks who are looking at Nvidia versus Google, it's a big difference. And then, I always try to remind my traders in the Sector Secrets Mastery that AD is less a word and more an acronym, and it just stands for actually delusion and denial. How many Nvidia trades are going to turn into investments this morning? I got a hunch, quite a few of them. All right, so be careful. We don't want to slip down that mental error, that slippery slope of turning trades into investments and focusing on symbols that don't have some kind of reason to presume that the structure could hold. But let's also remember, this hit everybody out of nowhere. Otherwise, the NASDAQ wouldn't be down, right, 3.5%. So let's remember, no one saw this coming. By no one, I mean publicly en masse, no one saw this coming. Otherwise, we wouldn't have this size candle, right? Although everyone on television will clearly have known this is coming. So, of course, those geniuses aside, us mere mortals have to react to what we see. And so what do we see here? More volatility on a month that's been really volatile. So I haven't been that active in January, not because I see trouble coming. Please, I'll never be that person telling you that we can see this stuff ahead of time. What I will tell you is we've had chop. And in the context of chop, our watch list should be smaller. And because our watch list is smaller, the potential for setups is less. So very organically, January and frankly, December has been slowing the process down because there's less things to set up and therefore less triggers, right? To persist in really December or January in the way that I was in, say, October or November would be nonsense because these are very different market structures. Yes. In fact, one of the best months of the second half of the year was November. Contrast that to December, January, and you realize if we don't have a way to shift gears on what we're seeing and therefore what we're doing, we're in big trouble. And that's a big part of what we do in the mastery, which is, hey, what are we dealing with now? Not 3 months ago, not even 3 weeks ago. What is the right edge of the chart? What is the now telling us in terms of structure? And the now has been pretty much telling us consistently there's not a lot to do. Consequently, this is probably the most inactive month that I have had, not only in the mastery, but personally in well over a year or two. It's just there's not a lot to do. And then we know also that the 4-year cycle also imposes its will on price action as well, which is to say every 4 years, especially if there's an administration shift, there's going to be volatility. Last week was a great example of just how much volatility we've been seeing. For some of the first stocks to get hit by some of that volatility were things like Tesla and things like Apple based on executive orders. We can't see these things coming, but we know the probability, right? We know the probability of heaviness in a red candle stock like Apple, right? Just, I think I was talking about this last week. A lot of folks got really excited about one up day in an overall down market. Be careful with that. Be careful confusing momentum for an up move into exhaustion levels. In fact, momentum trading and chop is arguably one of the worst things you can do because momentum trading is going to presume breakouts when in reality, chop means containment. Nvidia is kind of an overly dramatic example of what could happen when traders think that a couple up days means follow through, as opposed to where have those up days taken us, right? Now, you might say, okay, Rog, what do you like? Hey, one of the trades that we really like and we've been talking about for a bit have been oil. Is oil and our oil stocks going to get hit by the overall risk aversion? Gang, in this environment, this world that we live in of high concentration weighting, it's really tough to hide out anywhere. But take a look at the Dow. Is the Dow taking the current environment as bearishly as Nvidia? No. Are there certain sectors in the Dow that have been a little stronger as opposed to sectors within tech? Yeah, let's take a look at financials. Financials have been doing pretty darn well. Do you think financials are going to throw a hissy fit about this narrative around Mag 7, most especially chips and Nvidia, et cetera? I think Broadcom's down pretty hard. AMD is down pretty hard, obviously Nvidia. So this is where we want to focus on where strength is. And take a look at financials. We've got earnings behind us. 1, 2, 3, 4, 5. On Thursday, we had our 5th green candle. good bullish momentum, this is an easier place to look for long positions, whether that be XLF itself, whether that be individual stocks within it. Please know that general risk aversion is going to affect everything if there's a sell-off, but really sectors that are more aligned with what's happening non-semiconductor should be able to withstand some of the sell-off a little bit better. All right. Okay, that said, I do want to mention for those of you that are saying, Rob, are you saying never to momentum trade? Oh, gosh, no. On Friday, I walked through my preferred way, my favorite way to deal with not just really momentum, but what I call pre-momentum. In other words, what are those setups we could take advantage of before the momentum breakout happens, and how do we manage risk before that happens as well? And if you head on over to the Simpler Trading YouTube channel, which I don't have up right now. Many of you are probably on that channel right now. And I'm going to post this on my channel later, likely today. But if you take a look at the Simpler Trading YouTube channel, you will see I had a video on Friday that I think was called Know the Momo. And this is how to trade momentum setups step by step. This is an absolute step-by-step setup, because I'm really sad about traders who end up presuming every breakout is just going to usher in the next uptrend. And what are better ways to set up far more superior risk-reward scenarios for those momentum breakouts before they happen, right? Not that we're looking into the future, but we're trading chop for what it is. We're not going to presume chop ultimately turns into a momentum breakout through resistance or support or whatnot. So check it out. I walk through step by step something you could start looking for today. And it's called Know the Momo over at the Simpler Trading YouTube channel. All right, so let's get into some of the questions that we've got here. And good morning. Good morning. You know, PK, that's hilarious. Yeah. There's a lot we don't know about what's going on in this narrative around DeepSeek. Yeah, no doubt about it. I just remember seeing a few tweets turn into a few dozen tweets, turn into a few hundred tweets as then the app was climbing the charts like Billboard Top 40 and became the #1 app over the weekend. Some of it's hype, some of it's attention, some of it's curiosity. I know for me, it was curiosity, right? And then, you know, lo and behold, now we've just taken that narrative and accepted it as fact, which, you know, we're a far way from doing that. Because I remember there was some lab coming out that's saying we had a seriously mind reading AI. I remember there was also something that said we had speed of light messaging. Like, there's a lot of things that folks say they've got. Then when on further inspection, there's not much there. Not saying this is the case, but clearly the movement is real. Whether this is a real story or not, the move is real. So let's talk about what we could do this morning. All right, let's stay nimble. Let's avoid perhaps some of the sectors and or indices that would be sort of in the direct line of impact of this narrative, or, you know, like, we can shorten the time frame and take a look at the Dow, S&P, maybe Russell. I don't have to run into the battle. You know, don't feel that just because the news is around Nvidia and semiconductors and Broadcom and AMD, that's where we have to trade. In fact, for me, I'd rather let everyone else deal with that mosh pit, come back out with the black eyes and bruised ribs, and I'll wait for the dust to settle and see what is there in terms of an opportunity. Ultimately, it's kind of interesting that the S&P has found itself above 6,000. It was in an uptrend, going from about just before 8 to where we are now here, quarter after 9. It was in an uptrend. So ultimately, what I'd like to see is that 6,000 holds. I'd love to see the uptrend come back. But I could buy the S&P at the green zone of my hourly price movement range. But please know, this is the previous session close, way up there at 61.32. As a general rule, I prefer not to day trade long, whether long calls or long the futures contract, symbols that are this far below or below the previous session close. But this is not a normal opening, gang. I'll trade what I see, not what I think. And here's where I've got some contrast between being below this very important sentiment-based line in the sand, which is the previous session close, and then yet having some near-term bullishness that could encourage some folks to take the long side of the trade. What about looking at other sectors, right? What about sectors that are not as influenced by what's happening in tech? I mean, Dow might be one of those places. We might want to get far more specific to an individual stock or an individual stock. My smoothie arrival is here. Okay. You can, no. So ultimately what we have here is a setup in terms of, say, the Dow that's still well below the previous session close, but instead of 2+% or 3+%, it's 0.75%. Perhaps financials might be stronger. Perhaps healthcare might be stronger. Perhaps energy might be stronger. These are things we can look into after the bell. So I can't say that I would focus on a mean reversion or even bullishness or bearishness quite yet, John. I'd like to see. So the question is, how would someone day trade the ES? John, I would like to see the first 5 to 10 minutes of the morning go by. Just because the bell is wrong doesn't mean I'm going to have a setup or even something to do. I'm not going to presume to fade, right, the weakness. I think a lot of folks will say, let's buy into the weakness, gap fade. There really should be a setup that precedes any kind of assumption like that. So I'm going to have to wait for a setup, John. At 917, even though ES is moving and grooving already, remember at 9:30, we're going to have a whole new burst of participation in this symbol, and I'm not going to front run that, right? In fact, if I'm pre-market trading, I will usually wind down those pre-market setups looking for that around 9:15 latest, and I do not want to be in a fresh trade just before 9:30 because we know those initial candles between, say, 9:30 and 9:35 can be really, really big ones because it's a whole new wave of participation. And usually it echoes some of the panic or greed that can precede the bell. So let's say you and I are futures traders, right? And instead of trading ES at before 9:30, you've got a whole host of traders who are looking at the SPY or even the SPX, right? They're going to see the news that happened before. They're going to see what happened in the ES before, right? An hour before, 2 hours before. And a lot of times what you get is an echo from that earlier action by traders who did not have an asset class that was trading at that hour. So I kind of always want to be aware of that echo. So I do like things like the Dow GR. That might be a great place to focus in lieu of, going right into the narrative that's going to be no doubt talked a lot about today. But I think the biggest thing that I can hopefully share with everybody is, this is why we don't add to losers, right? There's a big difference between scaling in. If you don't know what scaling in is, Rog, what's the difference? Isn't it just a matter of different words? No, I'm not splitting hairs like that. Added levels are never predetermined or pre-shared for that matter. They are levels that are absolutely a reaction to, oh my gosh, I'm losing money. So let me lower my cost basis. In the event that I get a little bit of a bounce, I can get out with a profit. But in the meantime, think about the consequence of an ad. You're spending more of your dollars. You're also increasing the risk to the account, right? Period. By scaling in, by knowing how many times I might want to buy, let's say, Nvidia, before I do so, I can budget accordingly. I cannot exceed that budget. I can choose to not present increasing risk to my account because all of it was determined at the onset, and the onset is before we even get in for the first time. So these are all things to keep in mind, as we're going through any kind of setup. And then why would I prioritize something like Nvidia over something like Google? The bottom line is I wouldn't. All right. You can see the difference between the resilience of a stock like Google at 92.6 right now, which is low, but it's not down in a way that's catastrophically down because why? This was a stronger stock to begin with. We're going to have more resilience usually in those names. All right. So there's no way that I'm going to make a big call on the day trade beforehand, but keep an eye on it. There might be a fade. There might be traders out there saying, hey, this is the sale we've been waiting for. Just wait for this setup. It could be a minor low. It could be a breakout from a little bit of consolidation, but heads up for that. Okay, gang, be good to each other. I will see you all tomorrow. In the meantime, if you have a moment, check out simplertrading.com/consistency. We're going to be doing a webinar coming up on the 5th, so about 10 days from today. All right, gang, be good to each other. Manage the risk, right? Flat is a position. I'll see you tomorrow.